Two major companies reported today, Disney and Ferrari. Let's first cover Disney. Now, guys, I want everybody to remember, these estimates are based on what source you go to, because according to Yahoo Finance, they beat $22.1 billion in revenue versus 21.8, but a lot of other people had them missing. Adjusted EPS, $1.21 versus $1.10. Disney Plus net adds, 6.3 million to 4.7 million. Now, for Disney, they're down big right now. They are down 9%. Okay? The numbers came in pretty good. Parks and Recreation, their revenue was up 10%. Here's a little chart showing the revenue breakdowns and the growth year over year. Overall revenue, 1% year over year. Guys, keep in mind, Disney's revenue is now higher than it was pre-COVID. And some of the big things they did great this quarter, they greatly decreased the losses. So guys, some of the exciting things is, look at this right here. Entertainment streaming revenue excludes ESPN Plus, rose 13% year over year to $5.64 billion. But most importantly, operating income of $47 million after a loss a year ago of $587 million. That's a $600+ million swing. So the streaming stuff, the things they're doing here are starting to pay off. That was a real drag on earnings. And if you guys remember, and I'll get into this shortly, my big thesis on Disney, because I own Disney, but you should not buy it just because I do. My thesis on Disney is that their profit margin is substantially lower than historical. And it's just a matter of time before that comes together and they start making more profit. Now, if you're new to this channel, this is our secondary channel. This is Everything Money 24/7. We do reactions, 4 or 5 videos a week. We love to react to the economy, to earnings, etc. So if that kind of stuff interests you, subscribe to the channel, please. That's all I'm asking you to do right here, because investing is all about managing your emotions. Our main channel, we talk about process, and even on this channel, I'm going to talk about process as well, but I really want to drive home the fact that this should not be scary to you. And that's the first time you're hearing that. This should excite you. If you're a Disney shareholder or you want to buy Disney, this should make you happy. You should want to buy things at a cheaper price. It's the only thing in the world that is backwards in this investing world. Everybody wants to pay more for something and they get excited. Everybody was more excited about NVIDIA at $900 a share than $100 per share. That makes zero sense to me. That's where I want to help you get to that point. That's really important to me. So as Disney continues to slide, these are some great numbers here. Disney Plus core subscribers increased to 117.6 million global customers from 111.3. Again, big growth there. That is awesome. Hulu subscribers grew to 50.2 million from 49.7. Not big growth, but still growth nonetheless. And ESPN's Plus subscribers fell to 24.8 million from 25.2. All right, so that's quarter over quarter. So overall, we're still seeing some growth for Disney, especially in streaming. But like I said here, this is what I love. Parks and Experiences, overall, 10% year over year growth. That's pretty solid. Here's their breakdown here. Sports plus 2%. Guys, I don't know if you remember, ESPN was, Disney at one point was talking about, or there was rumors they were going to sell ESPN. Then it became, no, we want a partnership. And they were valuing ESPN around $25 billion. All right, so that could still happen. We have no idea. But overall revenue, like I said, up 1%. Now, some other things I just want to go over. I've shown these images before. Average revenue per user with core Disney Plus and then Disney Plus Hotstar. Disney Plus Hotstar is the Indian version of Disney Plus. So overall, still seeing them growth on average revenue per user quarter over quarter. But look at this growth for Hotstar. 59 cents, 70 cents, $1.28. And as the Indian market becomes more and more wealthy, this revenue number is going to continue to grow. That's where I look at it going, okay, when I look at Disney, I sit there and say, what's being missed here? Look at this all-time high for Disney. $202 a share back on March 8th, 2021. That was 3 years ago. Up literally down in half now. And it got as low as $78 recently, October 4th of 2023. $78. Go woke, go broke. All right, all you angry people out there who sit there and say Disney's woke, I don't know what to tell you. All I know is that Disney has seen amazing growth. They have a great catalog of videos, but this is scary. That is scary. Anybody who says otherwise, guys, even if you're a value investor, you still have to sit there and say, okay, when a stock falls in half, I have to reevaluate. I use my fundamentals to buy the company. Then afterwards, I use a combination of my fundamentals and emotion to keep the company. This is what's happening here. Don't let price movement confuse you into believing you're right or wrong. In the long run, it will, but in the short run, it will not. What your job is to sit there and take advantage of Mr. Market's emotional behavior. Any given day, he's going to sit there and say, here's a price I'm going to buy or sell at. What your job is to say, okay, fundamentally, am I a buyer or seller? Am I holding? That's what your job is. But we get dragged along too much in where these prices go, up or down, up or down. And when stocks go up, we feel, hey, we're right. When stocks go down, are we wrong? Well, that's why I have this community. That's why I created this software. I want to sit there and merge fundamentals with the most important part of investing, which is the emotional part. We all are going to have emotional problems with investing. It's scary. It's tough. Both when we see something going up and we're like, I want to get in on that, or we see something fall saying, am I catching a falling knife? I look at Disney and say, my basic thesis is, okay, is Disney going to be around for the foreseeable future? Can you imagine a world in which Disney is not around? What would have to happen in that world? Doesn't mean it won't happen, but what would really have to happen in that world for that to occur? Then from there, do I think Disney revenue and profit will be higher in that foreseeable future than today? If the answer is yes to that one, my third and final question, can I pay a reasonable price for Disney today that gives me an adequate return on my money? What's that adequate return? Everybody needs to decide that for themselves. For some people, it might be 10%. Other people might be 8%. Other people might be 12%. It's all dependent on the investor. But what's most important and what the most consistent thing for all investors is, can you handle your emotions if the stock goes against you? Can you handle the emotions if the stock skyrockets and you want to buy more because you see it going up? That's what's most important. That's how you're going to make more and more money over a long period of time, especially as a stock falls and you're able to buy more shares. So if you want to be able to handle your emotions better, click the link below. $7 for 7 days gives you full access to our community of thousands of like-minded people you can have conversations with to help you in your investing and all of our tools. But remember, guys, there are limited spots every day. We limit the spots every day, so make sure you get in and sign in right now. $7 for 7 days. The spots go fast. So the question is, what's Disney stock worth to us? Well, let's pull up our stock analyzer tool. The last time I did it was just a week ago. Not even a week ago. No, about 10 days ago. So here's my 10-year assumptions for Disney. Revenue growth, low, middle, and high, 3%, 5%, 7%. Nothing to write home about. In fact, over the last year, it was only up 1%. So this is still aggressive for the last year. Profit margin, now remember, the last 10 years is 9.5%. The last 5 years is 3.9. Last year was 3.4. So I put in 9, 14, and 19. I'm going to change this a little bit. I'm going to go a little bit lower, 9, 12, and 15. Same with free cash flow. I'm just going to be a little bit conservative. Now, what multiple, PE, and price to free cash flow would you assign to Disney 10 years from now? Guys, this is part of why investing is so difficult. This is purely a subjective thing. I've had people tell me 15 for Disney, and I say, the market average is 15. You're telling me Disney's not worth a premium? I think it's worth a premium. If you don't, more power to you. That's what's great about investing. It's an art. It's not a science. It's an art. What do you think is the right premium for Disney? I put 18, 21, and 24. Same with price to free cash flow. You know why? I took this from Warren Buffett when he talked about Coke. If I gave you $200 billion today and say compete with Disney, I don't think you could. And that's what tells me it's worth a premium. I just don't think you compete with Disney with a check for $200 billion. And that's what's important to me. And finally, desired annual return. I always put in, as of late, 9% just for the market return. So this has no margin of safety. Remember, you need margin of safety because valuation is an imprecise art. The future is unknown, and we're human. We make mistakes. So make sure you put in a margin of safety down here, a number higher than 9%. I hit the analyze button. Guys, I have a low price of 75, a high price of 205, a middle price of 128. Now remember, these returns below include dividends. So just remember that as you go forward. Now guys, Ferrari. Here's what Ferrari did. $2.12 EPS beating $1.99 and revenue of $1.72 billion beating $1.68 billion. Ferrari is a company that I would love to own. But I'm just going to go to Ferrari right here, put in our stock analyzer tool, and here are some of the concerns I have about Ferrari. One thing is their free cash flow is always much lower than their profit margin. So it's something I have to get my head wrapped around because they don't build a lot of cars. Ferrari builds 13 to 15,000 cars a year. It's not a ton. So I look at this saying, it's not like they're building tons of factories and all these things. It's like hard for me to get my head around. So that's one issue with Ferrari. But the great thing about Ferrari is it's very inelastic supply demand. That's it. It's like, listen, people are going to buy Ferraris whether the price doubles or not. I think they want to keep prices lower because they want to be able to sit there and say, hey, we want our loyal followers to be able to buy a car and make money off it. And I also want to remind people that Ferrari prices don't always go up. The same Ferrari you bought 2 years ago for anybody for $500,000, now is $350,000. Just remember that in the future. But Ferrari does a great job of doing exclusivity. They'll tell you, if you go to a Ferrari dealership and say, I want to buy a new Ferrari, you know what they'll tell you? Well, the same thing they told me. Go buy a used one, bring the car to the dealership, we'll register you as an owner, and we'll put you in for an order of one. That's exclusivity. I love that. There are certain Ferraris that come out and they say, yeah, we're not going to sell this to just anybody. We're going to pick the people we're going to sell them to. We're going to make 50 of these cars. We're going to pick those 50 people. I love that. Yeah. And Tim just said, gosh, that's awesome. Exactly. It's awesome. It's incredible. That's what I love. And that's what we're trying to build on this community of exclusivity. We're not sitting here trying to get 10 million subscribers to our community. We want top quality subscribers who are very interested in learning about managing their emotions and being good contributors to our community. That's what I'm trying to mimic, is this Ferrari method. I know it's software. It's not Ferrari. I get that completely. But in some micro way, I can create that there. So guys, let me go over my analysis for Ferrari. I did 5, 9, and 13% revenue growth. Profit margin, 18, 9.5, 21. Free cash flow, 10.5, 11.5, 12.5. I might be able to go higher from there, but we'll keep it that. PE and price of free cash flow, 20 to 30. And again, my market return of 9%. Hit the analyze button. It's pretty low, guys. 80 to 136. 240 to 400, 140 to 230. I have my watch list at 200. Guys, click the link below. Join our community. $7 for 7 days. Take care.